Despite what you may have heard, fossil fuel based energy sources remain vital to powering our modern world. Although we are most familiar with the top of the natural resource chain, like with companies like Exxon or Chevron, or at the very bottom in our local gas station, there's an entire world of pipelines and delivery networks that are sitting there waiting to pay you yields of 8%. If passive income is of interest to you, then take a moment to subscribe to the channel as we'll take a look at the midstream energy sector so that you can decide if this sector and its 8+% yields are a fit for your portfolio right here in the red zone. Most midstream energy sector companies are constructed as master limited partnerships or MLPs. MLPs are defined as business ventures in the form of a publicly traded limited partnership. They combine the tax benefits of a private partnership with the liquidity of a publicly traded company. Before we dive into the pros and cons of MLPs, for those who are new to the channel, I entered the red zone in 2024, generally defined as those 5 to 10 years before and after retirement, where your financial future is the most vulnerable to sequence of returns risk. I created this channel to share what I'm doing to navigate this period. If we look at the pros and cons analysis by Investopedia, we see the pros of MLPs being a steady income, which is a plus for us in the red zone, potentially lower risk, potential tax advantages, liquidity of equities, and limited liability. On the cons, tax filing can be more complicated, and these assets generally do not appreciate as much in price like stocks and other sectors. A little more on the taxes to MLPs is that the vast majority will issue a K1 tax form. Although those who invest in these not only do not mind the K1s, they welcome them, as it makes these investments particularly useful in the red zone in that initially your returns are treated as return of capital rather than ordinary or even qualified dividends, making them tax free initially. As such, it's generally recommended to hold K1 producing MLPs in a taxable brokerage account to get the initial, several years long in this case, preferable tax treatment. Now, whether you invest in individual MLPs or gain exposure through a sector specific ETF is really your preference. For me, I personally am unable to determine whether Enterprise Product Partners, ticker symbol EPD, Energy Transfer, ticker symbol ET, or Plains All American, ticker symbol PAA, might be better because there seems to be a lot of fund options and I don't really have to take the time to do so. If investing in individual companies is not your style, it's generally not mine. Or if you want to avoid the small complication of a K1, which again, I personally prefer the simpler 1099, you can gain exposure to this sector either in ETFs or closed end funds. If you're new to closed end funds, I did an introduction to them in this video. We can take a look at the sector's semi recent history by looking at an ETF that tracks the index, AMLP, versus the S&P 500 index. Just really for a reference, as these are completely different investments, so you can't really compare them. In the 2010s, MLPs took on a large amount of debt to fund those highly capital intensive infrastructure projects. And when the oil shocks in the second half of 2014 showed up, many were forced to cut distributions, which drove the total return of this sector down. Over the next 5 years or so, the sector in general focused on reducing that leverage and generating more stable cash flows as opposed to the growth at any cost mindset from the previous 5 years. We then see the COVID shock and the asset class regaining its early 2010s glory. In fact, as I said, you can't really compare these assets to one another, but just to give a picture of the last 5 years, AMLP has returned 237% or nearly double the total return of the S&P 500, which returned about 122% during the same period. Here are a few of the funds in this sector that I'll do a quick look into so that we can get a feel for our options with all of these funds issuing a traditional 1099 rather than a K1 tax form. First up are our closed end funds. The Neuberger Berman Energy and Infrastructure Fund, ticker symbol NML, launched in 2013. What I like most about NML is its current yield of 8.54%. Also, from the closed end investment vehicle space is the Kane Anderson Energy Infrastructure Fund, ticker symbol KYN, which launched in 2005. KYN's current yield is slightly lower than NML's at 8.32%, but like NML is trading at a substantial discount of 12.11%, which is just above its 5 year historical average. Finally, in the closed end fund space is ClearBridge's Energy Midstream Opportunity Fund, ticker symbol EMO. What I like most about EMO is its distribution of over 10%, and then it raised its dividend payout in April of this year. Next up are our open ended ETFs. Ticker symbol AMZA or the InfraCrap MLP ETF is yielding 8.84% and raised its dividend in January of this year. The Illyrian MLP ETF, you may recognize from the earlier comparison, ticker symbol AMLP, is currently yielding 8.3% and has incrementally raised its dividend a few times since 2024. Finally, we have from Global X, the Global X MLP and Energy Infrastructure ETF, ticker symbol MLPX. Although it's yielding only about 4.86% compared to all of the other funds yielding over 8%, we see only slight dividend cuts historically when other funds cut much deeper, as well as a growing dividend over the past few years. Here's a quick summary of the funds that I briefly mentioned in this episode. So, do any of these funds interest you? Feel free to leave a comment below to let the community know which midstream energy individual MLP or MLP fund you hold and why. Until then, I'll see you next time right here in the red zone.